Good morning, everyone. Welcome to another RF crypto video. On today's markets, we have seen a bit of a recovery. The crypto market cap has gone up 1.21% to $1.65 trillion. The market in general is moving laterally. Some coins are in the positive, some are in the negative. So, for example, Bitcoin is almost 2% up. Ethereum is a little bit down. BNB is 5% up. The markets are moving in a weird fashion. There is no consolidated flow in the sense that most of the market is moving in one direction. It's a fact where some are going up, some are going down, and this is just a statement that Bitcoin is no longer the king of crypto. It's no longer a driver of the market. Each token has its own driving factors, and we can see it clearly here. Bitcoin is up by a lot, while some are down by quite a lot. And I think this is the trend going into 2022 and in the future, whereby the dominance is at 42%. Still a bit high, but that's because the markets are quite bearish. If the markets are bearish, people are going to move out of riskier assets into safer assets. And what's the safest crypto asset? Bitcoin. So people who want to stay in crypto, they leave other coins such as Ethereum, Solana, and what may be Dogecoin, Shiba Inu, or whatever, and then they move their money to Bitcoin, which they consider to be a safer cryptocurrency. Looking at the Bitcoin chart, as I said before yesterday, the support level now stands at 34,500. We can just estimate it as 35,500, and the price is trading and teasing the support level line. And I believe that the resistance level is at 40,000. So as you can see here, this red candle reached 39,000 almost, and it went back down to the support level of 35,000. And it is trading between these two bands, even though it may not seem like it. But if it goes above the $40,000 band, I see it going all the way up to between 40 and 46,000. But if it goes down below the $35,000 band, I can see it going down to between 32 and 34,000. On some quite concerning news, a House bill could let Treasury Secretary block international crypto transactions. So the crypto industry is sounding the alarm at the possibility that the US will be empowering the Treasury Department to make arbitrary decisions about whether to allow financial transactions, and these include cryptocurrency transactions across borders, so cross-border cryptocurrency transactions. So there is this America Competes Act, and it's a bill introduced to the US House of Representatives early this week. The main aim of this bill, as stated, is that they want to counter the global economic influence of China, but on page 1,200 and something, they snuck something in which is very, very concerning to the financial sector and also to the crypto sector. So this bill allows Treasury Secretary to block or impose conditions on transactions should the official find that the transactions or the accounts involved are engaged in money laundering or any other illicit transactions. The Treasury Secretary already had this power in limited quantities. They could block financial transactions. However, under the existing law, the regulator, in consultation with the Fed Reserve Chair, Secretary of State, federal regulators, and other agencies, can impose these restrictions on any financial transactions. However, a public rulemaking notice must be issued alongside the restriction, and the restriction will lift after 120 days unless the Treasury Department implements a rule continuing the block after the comment period. This new provision removes the comment period of 120-day expiration, and it explicitly adds digital assets to the type of financial transactions that the Treasury Secretary can restrict, because the provision states that innovation in financial services that allows easier fund transfer across borders, particularly in digital assets, which makes it easier for criminals to transfer funds. So it specifically states that we can block any any financial transactions, including cryptocurrencies. So this industry think tank, Coin Center, has warned that the bill could allow Treasury Secretary to block all US institutions from interacting with crypto exchanges, jurisdictions that has crypto exchanges, and crypto transactions validated by a non-US miner on non-custodial wallets. It would hand the Treasury Secretary unchecked discretion to forbid financial institutions, including crypto exchanges, from offering their customers access to cryptocurrency networks. Before, they had this power in a limited sense. They had that 120-day comment period. They needed to issue a public notice. They needed cooperation between different regulators. But now all of those impediments are put aside, and the Treasury Secretary can directly block if they deem that the transactions are including anything illegal. This gives them so much power that they can deem something illegal while it's not, or something that is of national security interest, and keep it confidential and just block it. And this put a damper on, cryptocurrency evolution, because it gives them ease to block any crypto assets from coming into the market, or any DeFi products coming into the market. They could impose restrictions on banks and other financial institutions from transacting with crypto exchanges, which would take a very, very big hit. It's very funny and it's very weird that this bill is aimed at spurring economic competitiveness with China. Then why is it including such bills to greater increase their influence over the financial markets? It just doesn't make a lot of sense, and it's something to worry about. The bill hasn't passed yet. It is in the House of Representatives, because in order to become a law, the provision needs a counterpart in the Senate version of the bill. At the moment, no such counterparts exist. Even if it passes the House, there is no such counterpart, so it wouldn't become law. After the Senate and House pass their respective version, the bill goes to a conference committee where representatives from the House and Senate will iron out the differences between the two versions of the bill, which means that there's a lot of bureaucracy before the bill can pass, and it is not clear if the bill will pass. But if it does, then it's very, very, very concerning. Treasury will have a lot of say in the financial markets, and it erodes privacy, it erodes economic freedom, and it erodes financial freedom as well. And because the US government and the Treasury sees crypto as a threat and not as an opportunity, this could offer them an opportunity to clamp down on crypto transaction, clamp down on new projects, and it could slow down the evolution of digital assets. But hopefully there is a solution to get out of this. There is a solution to circumvent such restrictions that allow this sort of revolution and evolution to go on. The White House is reportedly preparing executive order on crypto. Joe Biden's White House is expected to issue an executive orders in the coming weeks about actions that the US government will take regarding digital assets. Rumors of a potential executive order on crypto have been swirling in recent days. Earlier this week, Forbes reported that these government entities would likely issue reports on their findings by mid-2022. So there are government agencies that are studying the crypto markets and the crypto universe and determining what the pros and cons are, what the risks are, and what recommendations they're going to give to the White House in order to include in that executive order. They're going to probably present their findings by 2022, and the rationale for the executive order that might take place after the findings are presented is national security, and that crypto is a cross-border tool for shifting money. The ability of a decentralized blockchain technology to circumvent geospecific surveillance or rules means that the administration may push for synchronized international regulation with other countries. So there might be a US regulatory framework for crypto that they might push to, let's say, the World Trade Organization or the United Nations in order for there to be international compliance, so that there will be a monitoring of cross-border transactions. This, in a way, is not bad. It could bring positive developments, because it could bring a stop to money laundering, frauds. It could clamp down on terrorism financing, and illicit activities will go down in general if implemented correctly. Also, a senior ETF analyst at Bloomberg, Eric Balchunas, noticed earlier today that Biden's administration viewing crypto as a national security threat may also be behind the constant rejections of Bitcoin spot ETFs. We have futures ETFs, we have Bitcoin futures ETF, but never spot. They haven't been approved as yet. And it's very strange that it's not been approved, because why has it not been approved when we have already a Bitcoin futures ETF? It just may be because there has been pressure from the government to not approve this until there is a regulatory framework in place. Fidelity seeks SEC approval for Metaverse ETF. So Fidelity Investments has filed an application for a Metaverse ETF, which aims to track public companies that have exposure to the blockchain-based networks of three-dimensional virtual realities. So this application is the latest among companies looking to address skyrocketing interest in the metaverse. For example, last December, ProShares filed a Metaverse ETF application with the SEC. If you don't know ProShares, it is a company that already has a Bitcoin futures ETF, and obviously the next step would be Bitcoin spot ETF. But with the constant rejections, they have shifted their focus to NFTs and the Metaverse, and they have filed a application with the SEC to have a Metaverse ETF. Last June, Roundhill Investments launched a Metaverse ETF that trades on the NYSE. Also, 4 major South Korean asset management funds are also now listing Metaverse-related ETFs, a first in the country. We have moved from crypto ETFs, Bitcoin and Ethereum-based ETFs. Now we're moving on to the Metaverse ETFs. Probably the next logical step will be gaming ETFs or ETFs that track companies that have exposure to gaming in the Metaverse and also companies which have exposure to NFTs. So it is very interesting. ETF used to be traditional in the sense that it tracks tech stocks, it tracks mining stocks, it tracks gold, it tracks silver, it tracks commodities. Now we're moving into digital assets. Now we have Bitcoin. Now we have Metaverse. What's next? It's going to be interesting to see what happens in the next few years. And with that, we come to the end of today's video. Thank you very much for watching. If you liked the video, please leave a thumbs up. Please hit that subscribe button, and I'll see you tomorrow for the next one. Invest wisely, and cheers.